Hi everybody. I was told to blend in, so with or without climate risk, the merger between the two organizations of FINOS and OS Climate actually is the catalyst for bringing climate risk into the core of financial services. And one of the things I coined a while ago was the big green short. Climate risk is a complicated subject, impenetrable. You've got to make it accessible. You've got to make people relate to it. So in 5 minutes, I'm going to ask massive questions about a massive risk. What is the big green short? How big is climate risk to the solvency of the system? And how OS can actually help you accelerate. Okay. So you all know The Big Short, yeah? Everybody's seen the movie? Okay, what was it all about? Mispricing and failed models, yeah? So what's the big green short? Well, it's got a prettier star. And I love champagne, but I also love Guinness. For those of you out there, if you mix the two, you get a black velvet. It's very, very good. And of course, if we're gonna have extreme weather, I'm gonna need my wellies, okay? So what is the big green short? It's actually an environmental short. And why does it matter to you? It's all about starting with physical assets. Physical assets is nothing new for the financial system. We're just going from it being a de minimis consideration to a very significant consideration. And if you really want to bring it home, it includes your home. So the very first thing we're looking at integrating into the traditional financial system is physical assets, okay? And why does it matter? Because the big green short can happen just like the big short. If we don't bring in the right data and the right models, we're gonna have failure. We're gonna have mispricing, and we're gonna have catastrophe in the system again. So for the first time, we're gonna try and anticipate it. So we're gonna try and generate all of the integrity of the current traditional financial system by ingesting climate risk. So let's keep it simple. How big is climate risk to the system and to its solvency? It's really simple what banks do. They lend money and they do it on a secured basis. So what does that mean? They want collateral from you. They want insurance on that collateral. And they want the collateral to be as simple as possible. So what's the majority of collateral? It's actually real estate. But beyond that, you get into more complicated collateral. So we've got industrial, manufacturing, plant and machinery, infrastructure, movable assets. But if you start with a simple area like real estate, you can actually solve that problem and then extend it to these more complicated areas. So US GDP is 27 trillion. Real estate value is 5 times GDP. Okay? So you only need a small wobble for things to go wrong. So we had the small wobble last crisis. We had failed models. Now consider flood risk. Flood isn't new, it's just getting more extensive, more frequent, more intense, and more expansive. So what happens to borrowers? They end up with higher costs. Insurance costs will go up. Sometimes insurance will just evaporate. And what does it mean for banks? Well, banks will ask for higher interest rates from you. They'll give you lower loan to value, and they'll ask you to repay earlier. Now that has a catastrophic effect on the collateral, the value of your home, the value of commercial real estate, and the value of all these other assets. So how can OS help accelerate your future viability? Well, you can see here we've got the extant traditional finance markets, and you just add all this new layers of information. And it's the open source nature of this information which over time becomes more and more commoditized. Basic climate information today and physical risk information can be quite proprietorial. But actually, like every market, the more it goes on, the more it gets commoditized. So the more you collaborate in open source, the faster you will commoditize it. And the faster everybody will actually increase their viability to survive the future. So we've got exactly 3 approaches to this. Design a commercial solution for all of your approach to physical risk. Create an OS backlog out of the componentry, which candidates you can actually work on together. And then as markets mature, do more. And then finally, as they converge, we won't have sustainable finance and traditional finance. We'll just have finance. Thank you very much.